Okay, so another adjustment for you guys today. We have an adjusting on depreciation. All right, so whenever we have some sort of like big asset, like a big piece of machinery or a vehicle or a building, we can depreciate it. And there's a ton of different ways to do that, but we'll be working with just a straight line depreciation here today with you guys. So some vocab here for you. You've got current assets and plant assets. Your current assets are going to be like the cash that you have and other assets that can be changed into cash within a year. When your plant assets are going to be assets that are used for a number of different years for the operation of your business. So that's going to be your buildings, your big pieces of machinery, equipment, vehicles, and all of those things. All of which can be depreciated, and you can take those depreciation expenses to help you when it comes to taxes. So if you claim these depreciation expenses, it goes against like the money that you've made, so it shows that you've made less and you can pay less when it comes to taxes. So depreciation expense is the portion of the plant's assets cost that is transferred to an expense account during each year, and it's going to be during the useful life of that plant asset. Your estimated salvage value is going to be once you're like done with that piece of equipment, what can you expect to like sell it for? So if I have like maybe a piece of equipment that's like made out of metal, and once it's done and I can't use it anymore, maybe I can sell it for scrap. Whatever the value of that is that I think I can get for it at the end is going to be our salvage value. And like I said, we're going to be using the straight line method of depreciation, which means that we depreciate the same amount each year for the extended life. So if something's, we can use it for 5 years, we are going to depreciate the same amount each year for those 5 years. Your accumulated depreciation is the total amount of depreciation expense that has been recorded since the purchase. So if like I have this piece of machinery and I'm depreciating it $200 every year and I'm in my third year of using it, my accumulated depreciation is going to be 200 plus 200 plus 200 because I'm in my third year. So my accumulated depreciation is $600, but for the depreciation for that year is just 200. And then the book value of your plant asset is going to be what you originally paid for it minus your accumulated depreciation. And that's going to show you your book value of that plant asset. Okay, so what we're doing today, there's two parts here. First, we have to figure out how to calculate our depreciation expenses and book value. And then we have to go and figure out how do we use that and record it in an adjustment on our worksheet. So the first thing here is we are going to figure out how to calculate our depreciation expense. So in this case, let's say it's a computer, okay? So our original cost here for our computer is $1,250. We think that after we're done with this computer, we can probably sell it for $250, okay? So our estimated salvage value of that computer is going to be $250. So 1,250 minus our 250 salvage value is going to be the estimated total amount that we're allowed to depreciate. You can only depreciate the difference of those two there because you're still going to be able to get money back from your salvage value. So we can only depreciate this $1,000 here, okay? So then we take our estimated total depreciation expense for this computer, which is $1,000, and we think that we can use this computer for 5 years. Okay, so the years of estimated useful life. So we're going to take our $1,000, divide it by 5 years, which means that each year we can depreciate $200. Okay, so every year we can depreciate $200 from our computer for those 5 years. So then what we do when we calculate our book value here, we need to know, well, what year are we in? Okay, so this 20x2, that means that would be year 2, okay? So the first year, we would have depreciated $200, and then 20x2, second year, we would depreciate another $200. So our accumulated depreciation for the second year would be $400. And then if we're going another year, so our depreciation expense for the third year is $200. That means that our accumulated depreciation for the third year is $600. Okay, if we want to know at the end of our third year what the value of that computer is, we have to take the original cost that we paid, the $1,250, minus our accumulated depreciation. So at the end of year 3, we accumulated $600 worth of depreciation. So $1,250 minus our $600 of accumulated depreciation is going to give us our ending book value. So at the end of year 3, that computer is worth $650. Okay. Now, within a business, you're going to have a lot of pieces of equipment that you can depreciate. Okay. So when it comes to, you have to do this for probably, depending on how big of a company you are, it could be hundreds of different items that you have of depreciation for. So when we go to do our adjustments for depreciation, it's going to be the total amount of depreciation that we have. And we're going to do this in 2 categories, for office and for store, that we're doing right now. So we have accumulated depreciation that we'll have for our office equipment and accumulated depreciation for our store equipment that we'll be using, and we'll do the total amount of, so we could have like 12 cash registers that we're depreciating. We could have, 50 shelving units that we're depreciating. We're going to just add all of the depreciations together for our adjustments when we go to put them in our worksheet. Okay, so when we do put these in our worksheet, we are going to credit our accumulated depreciation. So whether it's office equipment or store equipment, we're going to credit that. And then we are going to debit the depreciation expense for office equipment or store equipment. Okay, so if you look at our work together here for 14.5, we've got a couple of things that we have to do. So the first one is we need to calculate the depreciation expense for a computer printer costing us $1,600. Our estimated salvage value of this printer is $100, and we expect to have a useful life of 5 years for it. Okay, so we need to calculate the book value of that computer printer at the end of its 2nd year of service. So we're going to do that first. So you need your page that looks like this. Okay, so we're going to use this to figure that out. Okay, so the first we have to figure out, well, how much are we depreciating per year? Okay, before we can figure out the book value. So number 1, we have our original cost here, $1,600. That's what we paid for that printer. Okay. It also told us in our instructions that our estimated salvage value is $100. Okay, so that's going to go here. So we're going to take our $1,600 minus our salvage value of $100. That's going to give us $1,500. That is how much we are allowed to depreciate over the lifetime of this printer. Okay, so $1,500. Then the directions also told us that we expect to use it for 5 years. Okay, so we're going to take that $1,500 and divide it by 5 years, which is going to give us $300 annually that we can depreciate. So each year that we use it, we can depreciate it $300. Okay, so when we move down here to this step, we're going to calculate the book value of that at the end of year 2. Okay, so we start with our original cost, which is the $1,600. And then we depreciate $300 on year 1. We depreciate $300 on year 2 for a total of $600 of depreciation. So our original cost here, $1,600 minus our total depreciation of $600 is going to give us a book value of $1,000 at the end of year 2. Okay, so that printer, after we've used it for 2 years, is worth $1,000. Okay, so we figured that. And we go back to our instructions here for 14-5. It said, on December 31st, Coastal Aquatics determined the total depreciation expenses for office equipment, so this is going to be everything that they can depreciate added together, of $6,120. And then for store equipment, everything added together that they can depreciate, of $5,060. Okay, so we need to put these on our worksheet. So if we open our worksheet, we are going to, oops, I'm going to have to do it this way. You are going to have to find here on page, let me find it on here. Okay, so the first page here, we are going to first be doing accumulated depreciation for office. Okay, so where do I have that? I have it right here, accumulated depreciation for office equipment, and this is going to be a credit. and we use the number that it gives us there. Okay, so it gave us a number of $6,120. I have to move that up so it's actually in the right spot. Okay, so accumulated depreciation for office equipment is a credit of $6,120. Now we also have to put it in that contra account. So the contra account for that on page 2 is going to be our depreciation expense for office equipment. Okay, and that is going to be a debit. So depreciation expense for office equipment is going to be a debit of the $6,120. Okay, then it gave us totals for store. Okay, so accumulated depreciation for store equipment, it gave us as $5,060. Okay, so that's going to be a credit, move that up a little there, a credit of accumulated depreciation store equipment of $5,060. And then in the contra account, it's going to have to go in for depreciation store equipment. So we're going to have to put that as a debit to depreciation store equipment of the $5,060. All right, so go ahead and do these things on your own. If you have any questions, you can let me know.